The conference is now being recorded.
Reliability, proactivity, and transparency. To do business with a smile, for customer delight, and a commitment to society. Thank you. Thank you very much. And I very welcome all the participants. I know it's a Monday morning and things take their time to start, and most of you are based on the western part of the country where the sun rises a little later than the other places. Times have been changing extremely fast. We are all witnessing that. I remember our last investor meet, which was on 4th of February, and that time the corona numbers had started going down, or from a little before that, middle of January, they had started going down. I was the one who predicted that this is probably the end of COVID-19, and how wrong I was. The second wave is here and has gone through a huge peak. Now, again, we are witnessing that it is kind of coming down, and we are praying that there is no third wave. Though I do recognize and I do get these feedbacks from that the cities, it has been going down, but the villages, it is still increasing. And the latest is that, at least from the western part of Uttar Pradesh, that the number of people getting cured and moving out and the number of new ones that are coming in is the same. But let's hope that this number keeps changing. Last few weeks or months have been absolutely horrible times. It's almost like a pralay that's been there. And it appeared as if the government had also lost control for a while, though now it seems to be in better management position. I'm sure that all of us have experienced requests for medicines, for oxygen, for ICU beds, and in rare cases even for places to complete the last rites. And everyone has lost some near or dear ones. I just request them that kindly accept our deepest condolences, which are definitely not enough. These times will go by, but the people who have gone will probably never come back. So deepest condolences once again. This time, of course, the corona peak is kind of coming down. But when I look at the recovery, I see that it's a little different from the previous one. Of course, we have the vaccine and we have better control over the treatment of corona. But there is this fear which is lurking, the fear of having experienced near death or deaths in the family or near death situations themselves. I know that Indians are resilient and are good at finding solutions for whatever things the state is unable to do or the government is unable to do. For example, if there was shortage of power, we knew that we could go to get a generator and do that, small, big, large, any size. Water was polluted or clean water was not coming through. Water purifiers came into fashion, into vogue. Air has been polluted, and we've got air purifiers to do that. But when it really comes down to mass health needs and requirements, and that too for a disease which is contagious, and where no one is spared, and you cannot travel out, or you cannot even travel to adjacent areas, this infrastructure is an absolute must. And that has been not there, and that has been a failure. Let's hope that there is better preparation, if there is any third wave, or at least for the future, that's there. And therefore, that fear is kind of lurking there in everybody's mind. We have seen that, some of these states, Haryana and Punjab, where the markets were open for a short while, for 3 hours, 4 hours, but the customers took their time to come back, or are taking their time to come back. And therefore, I see that the recovery is also going to be, however, we cannot lose hope. And I think that this fear may actually be good because it may the opening up may be taking some time, but it may help to stop the third wave. And if we bank on the Indian resilience and the Indian faith in God, eventually the government also getting its act right, with the FDIs and the foreign exchange pouring in, and the basic fundamentals still remaining intact, which is the political system is there, it's operating. The demographics are in favor of the younger population being there. The economic potential also being where it is. There is a lot of people aspiring to buy many more things. We are confident that things will be good, and we should. All we need to do is to just put our heads down and go along, and eventually catch up on the lost time that has gone by. Sheela Foam has continuously been doing its little bit in supporting this the second wave or the impacts thereof. We have, like the previous times, we have donated a lot of recyclable beds, mattresses and pillows, which are our forte. We've also got hold of concentrators from abroad and donated them. Ambulances, medicines, oxygen. In fact, we also ran a small hospital for a while to ensure that people who were in contact could get some hospitalization that was there. And this we have tried to do right from Jammu and Kashmir down south up to Coimbatore, etc. And we will continue to do that as the country prepares for the third wave. I'm kind of hesitating to say, but for avoiding the third wave. Getting back to business part, and for us, raw materials have always been very critical. At least the two raw materials, polyol and TDI. The volatility in the world continues. If I pick up from our last meeting, it has again gone through a peak and kind of gone down. The global interconnections, and the sensitivities to anything happening in any part of the world is only getting worse. Though one thing is better than the previous time, and that is the availability. Our belief is that the availability of raw materials is going to be better. The impact will be more on the demand side. The other good thing is that the downward trend of the raw material has begun. And for the next couple of months, we should expect it to be on the lower end of the curve. Our two subsidiaries, Australia and Spain, they continue to do well. There is growth happening. Last year, they have grown to the extent of ranging between 30 to 45%, and they have contributed a lot to Sheela Foam's top line. We see that their future there is good, and therefore are beginning to invest in facilities there to increase capacities. Our venture, the IT venture Stacko, is also doing well. In fact, whatever was the target of the previous year, we have crossed that, and we have an aggressive plan as far as the next years which are to come. On our CSR activities, we have continued through our Sleepwell Foundation to work on emotional wellness is very much required during these times. Business entrepreneurship programs. Surprisingly, when we made an offer that we could handle 50 people or 60 people at a time, the people who wanted to join in was in multiples of that, and therefore that's rationing. That just shows the effectiveness of the programs. Our army training programs have been also running well. So in spite of a lockdown, the CSR activities have actually been in more than full swing. Exports from the company have also picked up. and that is primarily to the it's reflected in the results this time. The only little problems here and there are more on the supply chain part of it, which I presume will get sorted out. In the last year, we did start our initiatives on managing or improving the environment and health and safety parts. So we have decided to do away with non-recyclable plastics. We are working with companies to even recycle mattresses which are used and are normally dumped, or there are some problems with them. So that program, both these programs are on their way, and we will be doing it. Coming back to the financial part of it, you have already got all the results. On the consolidated side, the revenue has gone up 12%, primarily contributed by the Australian and Spanish subsidiaries, and the annual profit after tax has also gone up by 24%. Specifically, the Q4, where everybody performed well. I know the Q1 was when we had almost about 2 months or 1.5 to 2 months of at least a closure in India. Australia and Spain were, of course, working. One more point that I just wanted to talk about was that we finished our board meeting on Saturday, and there was a lot of debate on distribution of dividend. However, looking at the uncertainties, which we said it is the demand uncertainty which is there, it may take a little bit of time, and therefore there was a thought to prudently control the cash outflows. We have expansion programs, which is starting the big one in India, in Jabalpur. In Australia, we have a full-fledged production facility which is coming up, and in Spain there is the expansion program. So all these investments are looking to happen in the immediate future. And the board was also advised us that in any case, whatever dividend you would be declaring, 73% would be to yourself, and therefore their position was that we should just wait for 1 more year. So these words, I just want to thank you all once again for joining in and for supporting us in the last year, which was, as we know, not only unprecedented that something like that had not happened in the near past, but it was also unimaginable that something like this would happen, and we are going through that. So thank you very much once again, and we would be open for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask any question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may please press star and 2. Participants are requested to use handset while asking a question. To ask a question, you may please press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Nihal Jham from Edelweiss. Please go ahead.
Yes, thank you so much, and good morning to the management. So 3 questions on my side. The first is, if I look at your segment-wise growth, what is interesting is that we've seen a strong growth in the foam core business. And I would assume that the mattress business also should ideally see similar growth based on the past trend. So the thought is that maybe the divergence in the two, if you could explain. And related to that, we've always said that foam core is a business that we ideally want to see a lower contribution of coming into the future. So is this growth more an opportunity that exists in the market that we've tried filling, or we expect that this is a business that will keep growing in the future also? I'll come to my other questions after this.
All right. So Nihal, thank you very much for the question. Let me just say that, yes, you're right, that the foam core side has grown, but I think it is only reflective of what has been happening in the market. And I do not see that this will be the trend forward. You would see more and more of finished products happening and finished mattresses happening. On the other part of the question, Dhruv, will you respond to that?
Yes, he has only asked whether the foam core business is going to increase like this. And I don't think you already answered it. It's not going to happen like this. So what else? Nihal, you can go proceed for your next question.
Sure. But Dhruvji and Rawji, any reason why foam core has seen such a big divergence over mattress? Ideally, the foam core is also something that in a way becomes an input for the other players to use as mattress. So that's what that. Why is it that the end product sale and the foam core sale is such a big divergence?
So Nihal, I see that as I said, I see that as temporary, and one of the reasons being that during the last year there was a lot of shortage of raw material, and we were the few who could sort of garner that raw material, and therefore the foam that we were producing, besides going into our thing, there was also a reasonable demand outside for that, and that is why that ratio would have kind of changed. But otherwise, I don't see any reason. It is just a temporary thing.
Sure, so that's helpful. I'll move on to the second question. This is more from the perspective of a subsidiary, Australia and Spain. So compared to the last quarter, there has been a contraction in the margin. I would assume that's because of the hike that happened in raw materials, and we would have used the higher priced one. But any discussions on taking price increases in that category which will see margins normalize ahead, or anything you want to highlight?
So both the places, there are regular price increases which are taken. In fact, in Australia, all our major customers have a rise and fall clause, which is related to the raw material part. There is, as you rightly mentioned, there is a lag between taking that price and passing on the price increase, and therefore it's just a question of time that they will get settled very easily. As far as Spain is concerned, we've also been regularly taking price increases. It's a little more erratic as far as Spain is concerned because we are a very small player and we operate in a very large market. However, at least I know in the Spanish, Portuguese area, the Iberia area, we are always the first ones to do that. And now that the raw material has started moving in the other directions, that position will get reflected in a different manner, or will get reflected in the opposite manner.
That is good. Last question from my side is that just any comments on the increase in the debtors and inventory for this year?
Can I take this one?
Sure.
I would have asked you to. Thank you.
Yeah, thank you. So, Nihal, inventory has gone up by 63 crores, primarily because the raw material cost of polyol and TDI have gone up. And the second reason is that when you see the monthly sale for the current year is around 170 crores as against 146 crores of last year, because this year there have been only 10 months of operation. So we will confirm that there is no increase in the number of days of holding of the inventory. So this inventory is increased only because of these two reasons. As far as receivables are concerned, they have gone up by 37 crores. Now, this is because, number one, the sales has also gone up, monthly sale, and there's some March phenomena also. In this March, we have sold worth 196 crores of rupees worth of sales, whereas in the previous March, it was 135 crores. Because we are analyzing the position as on 31st March, the number of days again of debtors have not gone up. It is only the sales which has gone up, hence the receivables are up. There is no other reason. Thank you, Nihal.
Understood. Thank you so much, and best wishes ahead, Dhruvji, and congratulations, Mr. Ahuja, on becoming CFO. Look forward. Thank you.
Thank you, Nihal.
Thank you very much. The next question is from the line of Shiv Kumar K from Unified Capital. Please go ahead.
Yeah, thank you for the opportunity. Good morning, sir. Sir, I missed the opening comments. Can you update us on the present status of the prices of TDI and polyol, and how do you see them fluctuating over the near term?
Shiv, I can tell you the current prices, which is polyol is about 205 rupees or 204 rupees, and TDI is about 180 rupees. They have, each one of them has gone up right up to 250 rupees. This is the downward trend that is happening. You asked me a question that how do I foresee them? Honestly, I foresee them as fluctuating, but definitely moving down up to at least July end, for the next 2 months, because those are the lean periods everywhere in the world. But beyond that, I will not be able to hazard a guess here.
Okay. So because Q3 is our key quarter, do you think by that time there should be some sense in the prices of these two raw materials?
Should be. And, at least as far as the other world is concerned, they are stabilizing. They are, whatever are the number of waves that have already happened there, they're stabilizing. India should be stabilizing. And, but, I have been wrong almost 80% of the time. So I will not hazard a guess as to what the prices would look like. But to my mind, they should hover between 150 to or 175 to a 200 level. Yeah. That's where it should be.
Right, sir. Sir, and can you throw some light on the emerging export opportunity due to the China Plus phenomenon? Has there been any progress on that front?
So there has been progress. There has been considerable progress. But, these things do take time for switchovers and for capacities to be built in India. And then there is the supply chain part of it, which also needs to be taken care of. Availability of containers and ships and shipping lines, all these things are being garnered. We are doing both from India and Spain. And if I talk of the year that has gone by, there has been a lot of progress. And subsequent to also that progress has continued. I will not be able to speak the numbers. But it's in the right direction. The pace may be a little slower.
Okay. And we'll see some traction in FY22 itself, sir?
Yeah, sure. Sure.
Right. Sir, and one question to Dhruvji. The other OPEX was on the lower side this quarter because typically for 500 crores, you typically record some 130, 140 crores of other OPEX. But this quarter, we only saw 100 crores. So is this sustainable?
No. This is a very deliberate attempt on the part of the company. Where if you go through our results, you will find that the gross margins have contracted quite a lot. From 43%, they have gone down to 39% because of the raw material price increases. Now, this was a deliberate attempt on our part to reduce our advertising expenses and selling expenses. So, if you see the mattress sale is also lower in this particular quarter. So, we contracted our expenditure on various fronts, whether it was traveling, whether it was advertising or selling expenses. Only the variable expenses to sales were increased. And in the sale which has gone up, which is foam core, there's hardly any selling expense or advertising. So that was the main reason for contraction of other overheads.
Okay. Sir, and are you seeing any drastic slowdown in the technical foam business again, or is it flat compared to last year's volumes?
Rakesh, would you take that question, please?
Yeah. So, technical business last year has fared reasonably well, especially the automobile industry, which has actually not only covered for April and May lockdowns, it has also grown in volume and in value both. And in fact, this China factor is also kicking in, and many segments which either direct export or the manufacturers who are making auto components, white good components, they're also getting a lot of inquiries from both US and Europe, which erstwhile were going to China. So it is looking very promising in the coming year.
Thank you, sir. That's it from my side.
Thank you very much. A reminder to the participant to ask a question. You may please press star and one. We have a next question from the line of Gaurav from Axis Capital. Please go ahead.
Thank you for the opportunity, sir. So my first question is with regards to like what we see the sharp decline in the GM this particular quarter. I do understand that the RM prices have been volatile, but as a long-term strategy, would the company consider absorbing some of these price increases and focus on gaining volume market share in the near term, or there would be a range of margin that the company aspires to make?
So thank you, Gaurav, for the question. We will be looking at, whenever there is a need and requirement, we do look at price increases to improve this gross margin. But there is always a time lag between the time that you take a call and before it's kind of implemented. And as I have said many times before, that the two major businesses that we do, which is one is the foam core business, the other is the mattress side. On the mattress side, whatever price increases happen, they don't come down ever, and therefore one is a little more prudent in that in increasing. But then as prices keep coming down, that balancing begins to happen. On the foam core side, I've said that of course we've sold more foam cores last quarter. It's a question of time lag that is there. And it will play the reverse way when the direction is southwards. Yeah.
Sure. And so, will you be mentioning the kind of price increases that have been taken during this year in the mattress segment particularly?
Sorry, I didn't follow that. Could you just repeat it, please?
Yeah. So the price increases that have been initiated during the year in the mattress segment.
Right.
What's the content of the same?
No. So they have already been implemented and they will continue to be where they are. We don't decrease the prices ever, or have not done that ever.
Sure. So because generally you take a 5 to 7% price increases every year. So just continuing the content this year.
So there are generally twice a year that we look at them. One is around beginning of April or the end of March for the coming 6 months. And the other one is somewhere around October, November, around the Diwali time. So we would review that position and see. But if the raw materials continue to go down, maybe we'll skip it. But we will have an eye on the gross margin and then take a call.
Sure. And so the second question is with regards to, generally we have seen in other industries wherein, there is sharp increase in the RMs and such. The organized or the large player generally tends to gain market share. Has there been a similar trend that has been noticed by us as well in terms of market share gains from unorganized players?
So as far as share from the unorganized players is concerned, definitely that has happened. And it's just that the size of the organized market has grown, and our presence in that has increased. Would I be able to quantify it? Probably not. We do have in the industry, a regular survey which is done once in 6 months. Rakesh, is it once in a year or once in 6 months?
Yeah, once in 6 months.
Once in 6 months. And when was the last one done?
It was done in January. In fact, because of the lockdown, it has not happened for some time.
Yeah.
So it was done in January. So now it is due to start again.
So when this will happen, it gives a reflection of, but our internal assessment is that the unorganized has contributed to increasing the size of the organized market, and our presence in that has, as the numbers of mattresses show, has increased.
Sure, sir. I would just like to place on record the sincere gratitude to Mr. Dhruv Mathur for all his help during these years, and also would like to welcome Mr. Devendra Raheja. Thank you, sir. And that's all.
Thank you. Thank you very much.
Thank you. Anyone who wishes to ask any question may please press star and one. We have a next question from the line of Rahul Ranade from Goldman Sachs. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Just a question actually to an earlier reply of yours in regarding the question of mattresses and, furniture, core foam kind of growth rate. Even if I look at it, for the full year numbers in terms of volume growth, your degrowth in terms of the furniture core foam is lower than the degrowth in mattresses. Whereas, if we had a strategic advantage in terms of procuring raw materials, just trying to think, wouldn't our branded business would have kind of grown ahead of the foam core business, or how should we think of that? Given the, lower, or the scarcity in RM, shouldn't we have grown the branded business instead of the foam core?
Rahul, thank you very much for this question. Interesting question. But when you think of the organized side, when you think of the branded side, everything to increase overnight doesn't happen because you need distribution, you need placement, you need the retail side to be in there, you need the consumers to be coming, and all that process to be in place. It takes years to build it up, but it also generally happens in incremental stuff. On the other side, as far as the foam core business is concerned, that is because there is a shortage. It's a little lower than branded stuff. It doesn't matter what the brand is, and therefore the volume can increase overnight a lot and can also decrease overnight a lot. So that's primarily the reason. But on the branded side, it requires many more steps to be done, which take their time to happen.
Okay. Understood.
I would like to... Rahul,
Can you speak a little louder? Your voice is very low reaching us here.
Hello?
Yeah, better. Thanks.
Yeah, no, I think there was someone else replying. Sorry.
Okay.
No, I was saying, I'm Dhruv. I was just saying that in mattress segment also, when you compare the absolute number of 5,93,000 mattresses as against 5,08,000, please remember these 5,93,000 have been sold in 10 months. So there is almost 35 to 40% increase in the volume of mattress segment as well.
Okay, but even for the foam core, would be the level of activity would be for 10 months, right?
That's right.
Yeah, so I'm comparing like for like then. I'm not making a mistake of comparing it. Okay. And just on the current activity levels, if you could kind of give some flavor of, mattress stores, how are the walk-ins looking like, and how many of the stores are actually kind of even open, and in the open stores, what are the walk-ins looking like?
I don't. Number one, it's not a very good situation to talk about. It's. I would put the stores as what? Rakesh, would you help me? Say 30-40% of them open on an average, or 25-30% open, and also open partially.
So I think the first 15 days of April, we had. Except for Maharashtra and Chhattisgarh, we have most of them open. But if I see from, let's say, 15 April till now, so not more than 20% would be open. And rest of them are either open partially or they try to give delivery through their godowns, but that too clandestinely. So there is no walk-ins as such. There is no business as such. But if there is any kind of a old customer who wants a mattress, that kind of 1:1 approach, and then the dealer servicing the order. That's what is happening.
Yeah, thanks.
Got it. Okay, thank you.
Thank you. Anyone who wishes to ask any question, please press star and 1. We have the next question from the line of Binoy Jariwala from Sunidhi Securities. Please go ahead.
Yes, thank you for the opportunity. My question is, I have two questions. One is on the capacity expansion plan that we've outlined, that we are adding capacity at Jabalpur. So could you just elaborate a bit, what products will be manufactured, how much would be the capex, and when this capacity will come on stream?
Okay, so it's a full-fledged plant that would be catering to the existing markets and plus some new markets. And the work has already begun on planning, etc. Construction should be starting in the first week of October, soon after the rains, and we should be in operation by the middle of next year. That's the target. The total investment is of the order of about 100 crores.
Okay, and with this capex, what would be our distance to the market? Because as I understand, the freight cost in this business is fairly high, and therefore you need to have multiple brands across the regions. So, is there any measure? By any measure, have you worked out the average distance to the market?
So average distance to the market is always an important criteria for doing it. It's not only the distance part of it and the cost of freight, but it is also availability of a product in its local flavor, which is important. And what I would suggest is that if you could just send your mail identity, we can work out a little synopsis of that and send it. Otherwise, to probably go through it might be long at the moment.
Sure. That's thanks for that. Second is on the distribution reach. If you could help me with the number of EBOs, MBOs as on 31st of March, and whether Sleepwell as on date is also majorly distributed only through the EBO network.
So Sleepwell is distributed only through the EBO's network. There may be some exceptions here and there, but the attempt is always on the exclusivity part. As far as the number is concerned, Rakesh, please respond to that.
Yeah. So EBO, we would be close to about 4,500, and MBO would be about 6,000.
So, Rakeshji, have we rationalized a bit of this network, or this is just in the normal course that it's fallen due to lockdowns and?
So it is not fallen, but there is a certain amount of pruning that is done on two accounts, on non-performance and also on exclusivity violation. On the other side, we also continue expanding. In fact, despite the lockdowns and adverse conditions, we were able to meet our expansion targets. So as of now, the total number, I've just given it a round figure, but it will be closer to about 4,800 or so. And MBOs are about 6,000. So there is no contraction as such. So there would be incremental if you see on an overall basis on the EBOs.
Fair enough. My last question, if I may squeeze in, most in this year, in FY21, we've seen a sharp increase in the raw material, and that reflects on the gross margins. Now, this gross margins the contraction in this gross margins has been counterbalanced by lower other expenses, mainly coming from lower selling and marketing expenses. Rahulji, once the situation normalizes, our network is operational. Assuming this, where do we see selling and marketing expenses settling down?
So my thoughts on that are this: that when Q brings anything down by some extent or by some sizable extent, you always find that there are areas of slab which were existing, you could have increased your efficiencies, could have made those improvements, because as you contract these expenses, you also look for efficiencies of operation, etc. And then when you are going to go back to them. So all I can say is that the effectiveness is not going to reduce. Effectiveness will probably only increase, but the cost may still remain low because we would have learned to do more with less. And whatever is needed in the markets when they open up will be done and will be there. However, we may have the advantage of organizational learning from a cost perspective.
So is there any number that we worked out with regards to, that X percentage of the cost has been pulled out of the system, and this will be away from the system, and not, even when we return to normalcy, it won't come back in the system.
So I won't be able to give you a number. Yeah, sorry.
Can I take this one, sir? Yeah. So on our normal advertising expenditure is 5%, and we have budgeted for around 4% this year. And the selling expenses, which were around 12%, on normal scale, we have budgeted 11%. So of course, in this quarter, they are much lower. So this is the percentage we are going to work in a steady period.
Okay. Thank you so much, Dhruvji. That's it from my side.
Thank you very much. We have the next question from the line of Hiren Trivedi from Axis Securities. Please go ahead.
Yeah, thanks for the opportunity. So two questions. One is, what would be the capex for FY22 given the investment in Jabalpur, Australia, and the expansion in Spain? And second is with regards to the raw material cost for FY21. So would it be possible to share the in percentage terms the TDI and polyol cost out of the raw material cost for the full year?
Dhruv?
Yeah.
Take that question.
Yeah, sure. So as far as capex in India is concerned, out of 100 crores this year, we will be incurring around 70 crores on Jabalpur. For export, we are going to incur around 30 crores. And the normal capex is going to be 45 crores. For India operations, is 145 crores. For Australia, the total capex requirement over a period of 1.5 years will be around 20 million Aussie dollars. And Spain, initially it will be around 2-3 million euros only, and subsequent expansion will be taken care of next year. And as far as your question about TDI and this constitutes around 20 to 25% of the net revenue. But it's very difficult to say because these keep on fluctuating so much. For example, 100 rupees to 250 rupees they have gone. So this percentage keeps on varying. On an annual basis, you can take a ballpark figure of 20% each for polyol and TDI.
Thank you. Yeah.
Thank you very much. We have a next question from the line of Avinash Nahata from Parami Financial. Please go ahead.
Yeah, hi. Thanks for the opportunity. My question is, what is the internal assessment of the management team as far as the finished products contribution over the next 2-3 years? I mean, the finished products, how would they contribute to the company from now onwards over the next 2-3 years? Thank you.
So, the direction is absolutely towards increasing that percentage. And if I would look at 3 years down the line, I would say they should be constituting about 75% of the turnover, and 25% would be in the other stuff.
Thank you.
Thank you. We have a next question from the line of Radhika, an individual investor. Please go ahead.
Hi, thank you for taking my question. So I have two questions. First, around the online sales, if you could, throw some light on how much the online sales contribute to the overall revenue, and how is that moved from FY 2021. And my next question was around your low price mattresses, Starlight and Feather Foam. How much would that contribute to the revenue? Thank you.
Okay. Thank you, Radhika. Rakesh, would you take both the questions, please?
Yes. Yeah. So, as far as e-com is concerned, last year we grew by about 70%, and we have aggressive plan for the coming year also. And as a percentage, I mean, it's a recent kind of start that we have done in the e-com area. So, on Indian operations, the current contribution would be close to 3% or 3.5%, but it is rapidly going up.
Understood. And the margins in the e-com business will be higher.
So, not really, because e-com, that market, especially in the marketplace, the product pricing is very competitive. And so the selling expense relatively are lower, but the selling price is also less. So the gross margin at best would be similar, if not a little lower than the offline. So that is the current state. That is the current state. Hello?
Yeah, am I audible?
Yeah.
To follow on that, then won't the pricing conflict with the offline sales?
So it does. So we have a brand, Sleepex. So we operate in marketplace through Sleepex, and we have brand.coms where both for Sleepex and for Sleepwell. So there we have the regular products of Sleepwell that we present to on the website. So as such, there is no conflict. But the retail going forward, the retail is also seeing this emergence of online sales, and so there would be new models of distribution which would be emerging, and so as an industry, the industry is finding the right way to strike that balance. So I would say that we are not still really matured enough to get to let's say a free movement of products and price across the channels. So, but it is like work in the process for the industry. The industry is trying to find the best way out. So currently, yes, you're right. I mean, you'd often get into conflicts with the offline. On the question of Starlight and Featherfoam, they're tracking well. So now they're being distributed mostly on the MBO side, and so therefore the potential is very high. And last year, let's say if I only talk about MBO business, so we would have grown almost about more than 40% on the sales to MBOs of Featherfoam and Starlight. So that's another very promising area in the coming year also.
Thank you. We have the next question from the line of Pankaj Tibrewal from Kotak Mutual Fund. Please go ahead.
Yeah, good morning, everyone. My question is that, in good companies, we have seen that a crisis is never wasted.
Your voice is not clear.
पंकज जी थोड़ा सा जोर से बोलिएगा.
Can you hear me now?
Better. Yes. Very much better.
So, Rahul, what I wanted to know is that in any good company, crisis is always an opportunity. Just want to get a sense from you that how you guys are looking at this crisis in terms of driving the growth for the next 2, 3, 4 years. And once this thing starts subsiding, in what form and shape can we expect your company to emerge? It could be both on domestic, it could be on export, it could be overseas. So some color and flavor that how you guys are using this crisis would be helpful. Thank you.
Thank you, Pankaj ji, for asking this question, and completely agree with you that all crises generate opportunities. And in fact, the bigger the crisis, I think the bigger is the opportunity. So, and what we have seen in this is that whatever are the strengths of the company, they get accentuated and you can leverage them better. And in fact, whatever are the weaknesses, they also get bigger. And therefore, when we analyze it internally, we say look at the strengths, which are the brands, the widespread manufacturing, the distribution, the R&D capabilities, the multinational nature of the multinational presence that we have. These are all strengths which we see flourishing and which we see coming to our aid and to our help as we move ahead from this crisis. The other side of it is really the weaknesses, and we constantly look. We are a little overcritical about that as far as the weaknesses are concerned, which happens with any mid to large size or a mid-size organization growing, which is complacencies and bureaucracies and the slowness that kind of comes in with all decision making, etc. So we have a program going on where we analyze we are analyzing each one of them and finding ways to remove these weaknesses, just to ensure that the strengths we are able to harness them and sort of potentialize them as much as possible. The environment or the scenario which is going to change, and I will just take a few examples. This is a subject we can spend a lot of time, and I would request a separate call for this. But for one is the opportunity, the export opportunity, which is the U.S. exports, primarily going from China. Today, China is no longer the preferred nation, and therefore that opportunity has come to India. How much as a country and as a company will be able to potentialize that is a bit of a question mark, but already begun. Opportunity large. The second thing this thing is the sourcing of raw materials. The raw materials and the ability to get them, make them available, and get them at the right prices. It needs work, but the direction has already set in. How do we improve this capability? Third is on the issue of people preferring brands compared to just buying anything, And we have our program which is laid out. Of course, at the moment, sort of contained because of the lockdown position, but the growing the brand will be something that will be seen as soon as we have some semblance of order that is happening. So these are few things which we have done, and then of course on the removing the weaknesses side of it, we do have programs to make us more robust and more quicker. Maybe have the mindset of a startup while still having the advantages of a large company or of a big company. On our outside subsidiaries, Australia, touchwood, is very well established to increase whatever the extra opportunities that have come by, and we are growing the capacity there because the current one is just not capable of handling. So, and business from a order of 60 million is already at a level of about 80 million. That's been happening. On the Spain side, as I said, we didn't have enough time to integrate the company. We acquired it in October 2019, and then suddenly from January onwards, there was the onset of Corona. So that integration process, same ERP system, meetings, and all that kind of a thing, that they are happening, but they are not the mark. That's one area which is of a large market. We just have 1% share, and therefore it doesn't matter if the market shrinks a little bit. The opportunity to grow from there will be large. But we can, on a separate call, we can talk a lot more about it, how we are doing, and what will the company look like in about 3 years' time.
Thanks. One thing that is missing in this call.
नहीं, आवाज बिल्कुल नहीं आ रही है.
Can you hear me?
Now better. Yeah.
Yes.
Go ahead.
So one thing which has been missing in this call compared to the previous call has been your furniture foray. I mean, you always have alluded as one of the growth drivers, but somehow this time no mention of that. Can you help us understand that part?
Yeah, sure. So it's not a forgotten thing, but the step was that we decided to be in two segments of the furniture. Is a very large segment, and very diverse things ranging from cupboards to beds to sofa sets to everything is there, which also are sold differently. So we have identified two areas. We have made our based on the properties that we want to offer to the market. We already have the prototypes ready, waiting for a pilot to happen. It should have happened a couple of months back when it was slated. However, because of the lockdown, we didn't do it. From the moment the lockdown opens, within a month, we would have sort of started our pilot, which will be at a good scale, and taken our feedback to decide what we want to. It's not forgotten; it's there, but we just wanted to be 100% sure of what and how we want to offer and the way it is. But all the designs and everything, they are ready. Pilot is ready to take off, and we're just waiting for the opening.
Great. Thank you, and wish you guys all the best. Thank you.
Thanks, Saket. Thanks.
Thank you very much. We have a next question from the line of Avinash Nahata from Bermi Financial. Please go ahead.
Yeah, thanks for the opportunity once again. My question pertains to export opportunity from Spanish facility. How does the unit economics work in terms of exports, lead distance from Spain to the rest of Europe and to the United States? Thank you.
Tushar, would you please take that question? Hello?
Yeah. Hello. Yeah.
Yeah.
Sorry, I was on mute. So I think the Spanish opportunity has been a bit of I wouldn't say up and down in business terms, but up and down in terms of how we are feeling about it from a comfort standpoint. It's just straight away post the acquisition, all the lockdowns and travel restrictions and the pandemic related sort of issues took over the whole world. That's been happening for the last 12-18 months. So on the one side, the business Touchwood has done well. It's done well at a local level. It's also done extremely well to start to scale up the export opportunity to the US. It's ahead of India in that sense, and the visibility of firm orders to the US market is only increasing as the weeks go by. On the other side, we would like the business, the people, the organization to start integrating into the larger company a lot faster as things ease out. So a little more travel, the ERP and the IT systems being the same, more integration on cross learnings on things like that. So those pieces have been slower than we would have liked, naturally so. And I think it's been a bit of crisis management, as in, let's say, a raw material shortage. We've been able to support constant conversations over phone or Zoom on Google Meet and those kind of things. But a little better integration into the organization over the next months and years. As far as the US business is concerned, it's done well, and it's only going to improve from here.
Sorry, my question was more to understand where the destination market is US, people exporting out of Spain and the local competition from United States. So how the unit economics and lead distance work? Thank you.
So Spain, in general, Spain is from a transportation, of course, better than India. I think the unit economics, the fair comparison would be from China and not really from local US producers for various reasons. I think that market already, or that production already shifted outside the US many years ago. Part of it might come back as the entry restrictions and trade war and all of that's happening, but we don't see too much of that. Customers are very comfortable outsourcing. They are just looking for a second base, and in that sense, I think not so much to us. It is quite surprising that Spain is overall able to compete. It's not a very high cost production economy in any sense of the imagination. It's fairly competitive. The only yardstick we have is we have target customer prices. We have what they were buying at from China, and we are able to profitably supply that and compete. So that seems okay.
Okay, a small add-on is so US as a market. So the outsourcing, China contributes to what percentage, and what is the rest of ex-China?
So mattresses, to the best of our knowledge, is about a $6 to $7 billion annual industry in the US.
Yeah.
And approximately $1.5 billion was getting imported.
Okay. Thanks.
Thank you very much. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you very much. I just want once again thank you all to be putting up great and very incisive questions. And like always, they are a learning for us, and we can put those into use. I know that we have passed through terrible times, or actually are continuing to do that. But look for better times soon. And a lot of prayers and expectations, not only for Corona kind of going away, specifically for our industry, for the normalizing to happen, for EBOs and MBOs to open, and people to start.
Voice is gone. Hello. Hello.
Yeah, sir. Tusharji, maybe you can fill up.
I think his line is also not there, Rakeshji.
Yeah.
Hello.
I think maybe we can wait for some 30 seconds.
Give me a minute.
So what is the process? You'll have to call them again, I think.
Yes, disconnecting and reconnecting.
Yeah.
Hello.
So please go ahead now.
Yeah, sorry, it just got kind of locked out. So I just want to say that we would be getting faster in our responses and quicker, and probably not so much of bureaucracy, etc., and time delaying stuff that normally creeps in. So we are getting better. We would be a better company, taking full advantage of the opportunity that has come. We, of course, didn't want Corona to happen. However, it did. But whatever are the opportunities, we will take full advantage of them. We'd also look at India as a continuing advantage, not so much impacted by what has happened in the recent past about shortages, etc., of healthcare. But I think these are now issues of the past. So with those words, I just want to thank you once again, and look forward to meeting you somewhere in between, or definitely at the next investor call. Thank you very much.
Thank you. Husband, on behalf of ICICI Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you. Thank you. Thank you very much.